Welcome to UK Education Commerce classes. In this session, we will learn what is profit prior to incorporation and what are the points to remember while calculating profit prior to incorporation or calculation steps. The profit which is earned during the pre-incorporation period. Profit earned during the pre-incorporation period or before the incorporation period is called profit or loss prior to incorporation. Profit or loss prior to incorporation. Then what are the points to remember while calculating the profit prior to incorporation? Let us understand in detail. Firstly, we are preparing the trading account. So, what trading account reveals the gross profit or trading account helps to ascertain the gross profit, and this gross profit is apportioned between the pre and post incorporation on the basis of turnover. On the basis of turnover, or simply we can say that on the basis of sales of the two periods. Then what about the fixed expenses? Fixed expenses. Fixed expenses include rent, then rates, and then taxes, insurance, and depreciation, salaries, and salaries to the staff, then audit fees. These are the major fixed expenses. These fixed expenses are allocated on the base of time. It is to be noted that fixed expenses are allocated on the base of time. The next, expenses which are relating to sales. Expenses which are relating to sales. It include commission on sales, commission on sales, then discount allowed, advertisement, salaries to the salesman, salaries to salesman, carriage outward, carriage outward, then after sale services, after sale service cost. These are the major expenses which are pertaining to the sales. So these expenses are allocated on the base of sales of each period, allocated on the base of sales of each period. The next, expenses in connection with purchase. Expenses in connection with purchases. It include discount received from creditors, then commission on purchase, then other expenses which are relating to the purchases, and these are allocated on the basis of purchase, allocated on the basis of purchase of each period. Then it is to be noted that certain expenses which are incurred by the company, such as the expenses like preliminary expenses, preliminary expenses, then directors fees, debenture interest, etc. must be charged entirely to post incorporation period. These expenses are charged entirely to post incorporation period. It's very important to note this point. Likewise, the expenses which are incurred in the pre-incorporation period, expenses which are incurred in the pre-incorporation period, like partner's salary, interest, interest on partner's capital, interest on partner's capital. These expenses are entirely relating to the pre-incorporation period. So, put it simple, Profit prior to incorporation means the profit which is earned by the business during the pre-incorporation period. Thanks for watching. Please subscribe channel for more classes. Thank you.